Good evening, ladies and gentlemen. Today is the 14th of May, and it was an interesting day once again in the market. Very choppy. We gapped up to 14,750, made a steady 150 point down move from there. From there, we saw an up move of almost a complete recovery, and then once again hit to the day's low, almost 250 points from the day's high of 250 points, and then once again a recovery. In between, some weird stuff started happening with option premiums where uh, puts would explode, but calls would not bother moving. It's more or less, it communicates that people who want to sell put options, they want to sell them at higher prices than what they are available at currently. And we saw a heavy amount of call shorting at the money, in the money, out of the money. And generally, overall data was definitely on the negative side. All that being the case, most of my day was just managing against some of the moves. And towards the close, the risk reward of staying in the strangle just didn't make any sense. I'm not expecting put options to lose too much towards the end of the day because of a potential gap down on Monday. And put option prices aren't as high as what we've seen in the past few weeks. And call options at the same time, taking into consideration that there are a large number of shorts in the system. And in case there is short covering early, then they can really explode. So call option prices are not coming up either. Uh, I would say more or less I was starting to get frustrated by the ending of the trade. So I decided to just exit out of it. It was still an all right day. I closed up positive by 0.33% of the capital used, but it wasn't particularly a day where there was much decay happening. So one of two things will happen: either we will see some kind of big gap up, gap down situation on Monday, or there will be a massive overnight decay that will take place over the weekend. So one of those two outcomes are what seem most likely. And 15,000 is starting to cement itself as the potential ceiling once again for this week's expiry. On the downside, there's not too much strength building up at 14,500. So difficult to say. And yeah, I hope you had a good trading day. Would have been tricky regardless of what you were doing because very choppy market all day. And yeah, I think if you've seen yesterday's analysis, that was more or less the analysis for today. So it was pretty much on point. I think you should definitely be checking out the post-market analysis that Ravi posts. In case you want to follow us live during the market, you can follow us at Nifty BN, the Twitter handle, and at Bandi Shreyas, my Twitter handle. So the next video will be on Monday, and I will catch you there.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Okay, so the pre-market is settled, and we're actually seeing a gap up. So yesterday was a roller coaster. Global cues pushed us down, and once again we took support. Our futures took support around 14,450, and the idea for today will be to strangle a very wide range. Just try to capture Friday decay, which is a recent swing high 15,050, recent swing lows 14,400. This gives us a beautiful range of 650 points. And yeah, more or less one thing that's evident is highest call side open interest, though not yet completely built up, it's at 15,000. Highest put side open interest is at 14,500. There is maximum, I think, at 14,000, but 14,500 is the second highest, and that's what matters. So market is just about to open, just open. We'll wait for the first 5 minutes for prices to settle in a little bit and then start taking position. Okay, I have just finished entering the position, and more or less we've opened flat after yesterday's shenanigans. The range I've taken is about 650 points with 14,400 on the downside, which is currently 325 points away, and 15,050, which is once again 325 points away. So you can more or less say the delta neutralizes at 14,725. The idea will be now looking at recent swing highs and lows. 14,600 will be a point where I'll have to start risk managing for the downside, and 14,825 thereabout start risk managing for the upside. More or less what happens on Fridays most of the time is people who have long option positions, both on the call and put side, they start to unwind, and you see a good amount of fall off in prices. for example, this 650 point strangle could lose anywhere between 15 to 20 points easily if we remain a range bound day. So that's the game plan for today. We'll keep you posted. OI will start to build up as well, since Wednesday was the expiry, and now positions will start to be taken on the new week's expiry. We'll keep you posted as the day goes on. Okay, so after the open, we continue to see this massive sell-off where we dipped by quite a bit all the way till 14,600, almost 14,620 thereabout. These puts expanded out of control. At a point they were at 65, and in order to deal with that, I had to keep moving my call down. But I always did it without overly creating a negative delta. So 1550 call moved to 15,000, then 4950, and then now 14,900. And yeah, the reason I didn't make it overly negative is because expecting the dip to get bought at some point, which is why I did not risk off on the puts. I just took additional call side risk to balance. More or less, now we are sitting on a 500 point triangle, which in itself has enough value on both the legs to balance a good amount of directional move, at least for 50 to 70 points in either direction without actually putting us in the negative. In the slightly in the negative at this point of time, so a little more than 4 points, 3.5, 4 points. And that's fine considering the kind of down move we saw. Imagine having to sit on 400 puts that had expanded all the way to 65. Okay, time is almost 9:45. And basically, right now, there are not many positions built up. So if you see overall open interest, it's slowly, definitely building on the call side, and we're seeing in the money call writing quite a bit. And what these kind of dips will be used to do is create positions on the put side, because there's not much value in the put side, and people will probably want to write 14,500 and below on the put side, but there's not much value. So I think dips more or less will be used to write put options. That will be the idea. Currently, the 14,700 at the money short straddle has a value of 170, sorry, 270, and so roughly you can say once again 300 points up and down from 14,700 gives us 14,600 and 15,000, which is fair enough. I think some of the drastic dips that will lead to a rush of put buying are mostly will be done to sell puts. This put side premiums are not as high as we've been used to for a while now. Um, Regardless of how this entire thing plays out, um, our position should do all right in this given range. Okay, so the time is 10:20. At one point, moved up the puts from 14,400 to 14,450 when the pricing was all right, because the job of these calls was to protect the down move, where these 14,400 puts were expanding. That job is done. However, now since my view continues to remain that we will see buying on dips when we head towards 14,600, and there should be selling on moves towards 14,800, instead of risking off the calls. Once the job of protecting the puts was done, I moved up the puts, because I want to keep my calls lower, because in case I move my calls back up and there's a second down move, then the rate at which these puts will expand will be extremely high. So um, that's the only change made for now. My full order book for what, when, how the changes are made will be available on the Telegram group as always. So in case you want to check that out, please do. Okay, the time is 11:12, and what I've done is IndusInd Bank. I was trailing a stop loss on the market, so it was about 35,000, and it was a very good return. I did a short straddle before its results, and the IV was high. IV cooled off, and despite the 40-point down move from the short straddle, even the put was in profit. So exited that entire position. Currently, market has made a second dip towards 14,650. So right now we have a positive delta on this till 14,675, and I'm not too concerned because the down move, whatever expansion on the put, is being balanced by the call to a large extent. Continues to remain in overall very lucrative range for the day. From risk management perspective, we'll have to look at the day's high and the day's low to do any sort of adjustment to this position. In case we start heading towards the day's low again, then we'll have to take on additional call side risk or risk off on the puts and vice versa on the upside. Bank Nifty has used 32,500 as a support for a long time. So today we are just trading under it, which is slightly concerning. Reliance is doing what it's doing, holding few points over 1900. And IT as well gap down and has been weak more or less the entire day. So overall sentiment definitely on the negative side. And yeah, our view shouldn't be affected too much by a big downside move, except for the instant IV spike on these puts that will be seen. Okay, so had this situation where we had a second dip for the day and have dipped below 14,650, and overall the data is quite bearish. So I mean it's relatively more bearish than it is neutral. We're seeing 14,700, almost 30 lakh open interest now on the call side, just 23 on the put side, and we're seeing in the money call writing as well, all the way till 14,500. I mean, there is in the money put writing as also, can't really make too much of an inference of it, but the volumes on the call side are definitely higher. So that being the case, have to protect against some kind of a continued down move from 14,650. Even if it's just a panic move, it will explode these puts. I'm expecting the expiry range to more or less hold 14,500 on the downside. So, but at the same time, considering that there's some kind of runoff down move, had to make this change. Right now we're 200 points away from the put side as well as the call side. So there is relative protection, but at the same time, we'll have to wait and watch now. We were almost at the day's low on the Nifty. Bank Nifty is at the day's low. Not much happening from Reliance. It's in fact actually making a higher low, higher high sort of pattern for the day. And IT once again at the day's low. So yeah, data is bearish, and yeah, this puts is starting to expand quite a bit. The next change beyond this will be just to move the puts away. So if we start testing 14,600 on the downside, and at that point, right now we can't look at how these prices are fluctuating, because every time we start testing the day's low, everyone does want to buy put options, right? So price will go up, but plan is wait for 14,600 to get tested. If we break 14,600, get out of the put side risk and look for a re-entry. Okay, we continue to head lower. Bank Nifty now testing 32,000, and I'm continuing to retain the view that dips will be bought and will be used to write put options. So, but in order to protect myself at different points, we tested 14,650 and 14,600. I had to keep rolling down the calls. So now, more or less, I am 150 points away in either direction. So the 14,750 call and sitting on the 14,450 put. The idea is 14,600 would have been very dicey. So just as we started testing 14,600, was forced to move the calls down to delta neutralize at 14,600. Otherwise, a down move from 14,600 would explode the 14,450 puts, and the 14,800 puts wouldn't necessarily protect. So currently down like about 6.5 points or so, but yeah, can't do much about it. It is one of those days which is trending downwards, but the one good thing is the premiums are relatively high and should see a fall off once we have some kind of stability. Okay, so 14,600 acting as a support. The job as of these calls is done. I'll move half, roughly 45% to 14,800. Idea is fear of these puts exploding if we tested 14,600 below is very high. To deal with that, have yeah 30% of the position at 14,700 call short, and remaining at 14,800. This gives us a good enough balance where a retest of 14,600 will not burn us too much from a mark to market perspective, and An up move will give us enough time to react. Okay, a single red candle, and use that red candle to get out of the 14750 calls and shift them higher. Now a lot of shorts would have built up in the system. If we start taking support and heading higher, those shorts will naturally get covered. So yeah, for now this is fair enough adjustment. This has a slightly negative delta now, but yeah, it's all right to hold because we're a downtrending day. Having a negative delta is fine. Okay, so something that is evident right now is up moves are being used to sell calls. That's why call prices are not spiking, because despite the up move, the calls are finding enough supply, so people are willing to sell calls. There's no urgency to buy calls, which is why you're not seeing a call side premium spike. Right now, we do have a negative delta, but despite that, an up move is not hurting us too much. But this is a double-edged situation. If calls don't get covered now and we continue to see an up move, then there will be a massive explosion on the call side. The idea is to wait and see what we do around 14650. We, I mean, using a different computer to chart, but basically you can drag a trend line here, and it has been a sell on rise situation the entire day. That's what the market is expecting, is high probability of continuing, which is why these calls are not getting covered. But if we make a quick 20-30 point up move, these calls will start to explode. So I've got my orders ready to buy back the 14800 call and sell the 14850 in case we see that. Yeah, we continue to have a negative delta, and yeah, I'm comfortable having a negative delta at this point of time. Okay, we're holding range for a while now. For the past 20 minutes, we have held above 14650, and I've used that as a cue to move away about 40% of the calls to 14850. And I don't want to get burnt on the up move, if any. Plan is we start heading towards 14700, then we'll move all of them back up to 14850 on the call side. When we start sliding down back towards 14600, we'll move these 850 calls back to 14800. Somebody commented yesterday saying that this is like playing a game of kabaddi, more or less. Yeah. Ignore my bad humor. We'll keep you posted. 1 o'clock, we've got 2.5 hours to go for market close. Now we might see that short coming spike, which is why the idea is to preempt. We're more or less at this point, like it's almost like we just entered our position because we're at break even, and we have a 400 point range, 200 up and down. I think at this point people will realize that our down move towards 14600 is an opportunity to buy. We'll keep you posted. Got 2.5 hours left to go, and have risked off on the call side as well. So one thing to note here is when we were heading down, I kept moving my calls down rather than moving my puts away. Whereas when we're heading up, I'm moving the calls away rather than the puts up. The idea is because on the range, I'm expecting 14500 to definitely hold, which is why risking of the on the put side will mean that due to the kind of fear spike that happened in these puts, that reversal that would happen would not happen to the same extent on the lower level. Whereas with respect to the calls, the reason I don't want to move up the puts is because basically we are trending down, and overall potential down move will then expose me to a really bad downside risk. And with the calls, the thing is, when we're moving up, we're finding supply. You can clearly tell by the way prices are reacting. Keep moving higher, 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 and the calls are not reacting. That's because people are using supply for call sellers is coming in. But there will be one point where suddenly people spook. And once people spook, there's quick buying, and then calls gain 10, 15 points in seconds. So yeah, the idea is to avoid that. Friday towards the last 2.5 hours is always good for time decay. Provided we don't trend, it should actually work out quite well. Okay, the time is 2:10, and basically I'll summarize what is happening now. We're slowly trending down and found some support around 14600. From there started to rise. On the down moves, the puts are really exploding, right? What does that tell you? That for supply to come in, it's only at higher prices. People are only willing to sell puts at higher prices. That's where supply on the put side is coming in. And on the call side, not a lot is happening. We're seeing a down move, but not particularly any decrease in call price, or an up move, but not too much of an increase in call price. So for now, market is in a situation where definitely we are biased towards the downside, but at the same time it acknowledges that there are enough shorts in the market that the potential for an up move is also quite high, which is why calls are not decaying beyond what they have already. Initially, we were seeing calls being written quite aggressively, but now that has come down a little bit. Regardless, now we are at 2 o'clock, and all said and done, after all the ups and downs, we are up something like 4 points, 4.5 points, and the idea will be to book with a profit. I mean, potentially the last 1.5 hour of decay on a Friday is very good, but at the same time, in case we start heading towards 14,600, we'll be cutting the entire trade. Okay, enough of this. I'm just going to start exiting the position once we stop this particular candle. Okay, it's going to be too slow. Uh, it's starting to be a very annoying day, so I'm just going to exit. Yeah, exiting at quite a bad time, but no option. Okay, the reason I'm exiting is finally the calls are starting to get covered, but at the same time, the put options are not losing any value. So the 450 put that I was on, or you look at any put option for the matter, 14500 put is not losing any value, and the calls are starting to gain, and it might trigger some kind of a big up move, and I don't want to sit in that. I have to exit these hedges. Hedges haven't lost anything today because there's hardly been any decay in any options anyway. So basically, more or less exactly as what I was fearing, because we are now seeing quite a spike. These have gone to 62, right? When we exited, they were at what price did we exit? Yeah, I exited at 59. It's okay, nothing great from that, but the put's not exactly compensating. So okay, so more or less done for the day, and yeah, about 2 points in the positive, which after charges shouldn't amount to much, but it wasn't particularly a day where you could have expected to get too much decay going on. The prices refused to come down, and I basically took the trigger for exit that one, the puts are refusing to lose value, and the potentially could be a short covering move, in which case the risk reward of the trade is just really bad. So thank you so much for watching. I will catch you next on Monday. Have a great weekend.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.